Mike Sintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on August 8th. So it's been a pretty good bounce back week for the major indexes, up after last week's, repeated distribution, selling on strength, and then Friday was a bad day. That said, it's still pretty thin out there, or pretty narrow anyway, in the sense that when you're looking at small caps, mid caps, broader indexes, even equal weight indexes like of the S&P 500 and of the NASDAQ 100, they're all just kind of sitting on their 50-day lines, which has our intermediate term trend model on the fence for the first time in, a few months since the major low in April. Now, I will say a couple of things. Number one, the long-term outlook or the long-term trend and big picture view is still very bullish. Number two, these things are sitting on their 50-day lines because they've basically been marking time. It hasn't been like they're plunging right now. I think the worst, pullback we've seen is 3.5–4% from high to low, which compared to where we've come from is pretty modest. And number three, and very importantly to me, is just, the last couple of weeks have seen, we've seen some earnings losers for sure, but we've seen a lot of earnings winners that aren't just gapping up after falling, 40%, but they're in pretty good position. They have good numbers. They have good stories. When I've been doing, I do Cabot Top 10 Trader, kind of get the list ready for the next week, kind of all week long, just in pieces. And then, of course, screening more and more Friday and over the weekend. And the last couple of weeks, before I even started screening today, I had 15, 18 names for the 10 slots. Doesn't mean they all look perfect or anything like that, but the point is there's a lot of names from a lot of different groups that are popping on earnings that do look pretty enticing or could break out, if things broaden out from here. What am I trying to say is right now we're still comfortable, having trimmed our sails, holding a chunk of cash, because usually when things are this narrow, there's some sort of pullback or rotation or, things like this, they don't go on forever sort of thing. At the same time, with the big picture view positive, and with, I'm following more and more stocks now as earnings season goes through and there's some positive reactions, I'm okay doing a little bit of buying here and some, especially if you try to find what you think can be a new or fresher liquid leader, okay? In Cabot Growth Investors model portfolio, we had been holding some cash, trimming. We trimmed some more. We got up to like 40-something, 44% cash. We did a little bit of buying this week, so we're under 40. I'd like to put some more money to work. I think like something for that portfolio, maybe 30 to 35 makes sense as of now. Trying to do a little nibbling in some of these fresher, future winners, but also cutting bait on some things that are lagging. Overall bullish, but right now still okay, staying relatively close to shore. Okay, that's enough for the intro. Let's hop into the charts as usual, using a program called Market Surge. You can learn more at Investors Business Daily. It's a product of Investors Business Daily. You can learn more at marketsurge.com. So when we look at the market again, so here's the NASDAQ. It's probably ticking a new high as I record this. Looks good, obviously in an intermediate term uptrend, no problem above the moving averages. S&P 500, not quite as strong. There was kind of, usually when you get a little bit of kind of a cluster of selling in there in terms of these reversals and things like that, it tends to be resistance, at least in the near term. So we'll see how that goes for both the NASDAQ and S&P, but nevertheless, clearly the trend is up. The problem is just about everything else you look at is just kind of sitting around this orange 50-day moving average. This is small caps, which admittedly are probably the laggard here, so you don't want to key too much off those. But, then you got the mid caps right on the 50-day line. You got the New York Composite, NYC. Again, it's positive. On the fence does not mean negative, but to me it's kind of neutral here. It's just kind of sitting there. And notice how, while the big cap indexes have all bounced, these things really haven't this week. And then when you look at, this is just the equal weight S&P 500. It looks just like the other things. This is the equal weight NASDAQ 100, on the 50-day line. Okay, so even with, and I can't pull this up on Market Surge, but take my word for it, if you just look at the percent of stocks within the S&P 500 and NASDAQ 100, about half are below their 50-day line, okay, already, whereas maybe at the start of July, it was maybe 20% were below their 50-day line. So things have just narrowed out. It doesn't mean, it's the end of the bull market. We're going to go down 20%, nothing like that. In fact, historically, the first pullback in the indexes, tends to be, I'd say, about 5%, give or take. So I don't know where that takes us, but, maybe we pull back here, that sort of thing. It's just something to be aware of. But right now, forget about predictions or history. just going with what we see now, yes, the big cap indexes are going up, but even within the big cap indexes, not much is going up. And the rest of the stuff is kind of marking time too, okay? And we're seeing that, like I mentioned here. This is the financials. You can just see they're struggling, honestly, a little bit below the 50-day line. If you look at, regional banks, again, this is kind of a laggard sector, so you don't want to key off of it too much. But just recently, you can just see a lot of taking on a lot of water, that sort of thing. I think industrials was the other one. Yeah, industrials, better than the broader indexes, but again, no real bounce this week. Stuff like that. So it's just, you don't want to dive too deep because, 1 or 2 days, all of a sudden we come in next Monday and industrials are up here and it's like, hey, everything looks fine. But, to this point, it just seems like a lot of stocks on a net basis. Like if we look at go back to the equal weight S&P 500, this was the start of July, this day right here. And so we've made no progress for that in 5 weeks. Is that the end of the world? No. But is it telling you that there could be sort of a subtle change in character while the big cap indexes are kind of testing new high ground? Yes. The question you got to ask yourself is if the spiders come down or the QQQ or whatever, what's going to happen to the rest of the market? Maybe there's a rotation or maybe everything kind of comes down with it. The other thing I would say is, and to me, it hasn't gotten to the point yet of like, ooh, but I do watch this every day. This is XLP. We bring it up every week. And you can just see that it is picking up a little steam here as most of the market is kind of going sideways. And if you look at some of the relative strength of, say, the equal weight NASDAQ 100, which is chips and software and stuff like that, versus toothpaste and toilet paper, it's actually kind of, again, just intermediate term now, it's kind of breaking down a little bit through some support. So just a few things I'm watching there. I'm not negative. I'm not trying to sound the alarm. I'm just saying I think it's, after a great rally, it would make sense that the market might have to digest, shake the tree, have some bad days or weeks. I'm not predicting that's going to happen, but I would just say the odds favor that it's gotten so narrow that there's probably going to be some reverberations here going forward, okay? We've also just seen some air, and you could look at this as positive, but some of these names, like this is a thinner one, but I don't want to say it was speculative, but this is Dave. You can see it broke out and had a huge run, always kind of thinner, not very well sponsored, I guess is probably the way to say it. And it's not a complete disaster, you can see, compared to where it was. But obviously, breaking down here through moving averages. Sezzle is another one, kind of a financial thing. It's getting destroyed, 33% today on earnings, stuff like that. So we're seeing some of these names that had huge runs that weren't super well sponsored. The rug is finally decisively getting pulled on some of them, which can kind of tell you that there's a little bit of a change in tenor. Now, with all that said, the reason I'm not like, super worried is I'm actually seeing I'm following more names now than I did 2 weeks ago by far. And you can always say that during earnings season because there's some things that are popping, but a lot of times in earnings, you'll get these stocks that are down here, they're way down and they pop 20%. You look at a chart and it still looks like garbage, Today, we're seeing a lot of names that maybe weren't in favor, but have started to emerge or gapped on earnings and could emerge going forward, okay? So here's Dutch Brothers. Now it's down as I record this, but you can see, retail hasn't been where it's at. Cookie cutter story, tested its 200-day line as recently as last week, but had a very, very nice pop on earnings yesterday. It's down today, but this is one of these ones where, maybe it just does this and it's back in the soup, right? But it's kind of a setup all of a sudden. Not going to give you a specific level, but if it's above a certain level, you're not that far from clearing a lot of the resistance from the past few months. So just, kind of an interesting action there. Astera Labs, of course, AI infrastructure is the main, really one of the only growth themes in town at this particular time. But this one's come all the way back. I don't know what you do with it. I'm just flagging it. Stock's up, basically from 100 to 175 in 3 weeks. But, maybe you get some sort of shakeout on these. Arista Networks. This is an interesting one to me. Always been a leader, well-sponsored, consistent growth. You can see the earnings line, a little bit of deceleration there, but, consistently higher. But it had a big reset here, big correction, and really wasn't a leader coming out of the gate. But the recent earnings report here, gapped it to new highs. Does it shake out? Does it hold up? This is a potential liquid leader in my mind. Reddit, I think we mentioned this last week. Nice, not only just a gap on earnings, but so far a nice follow through. Again, there's some resistance up here and the market could pull in and this could shake out, but so far so good on that. Western Digital, Had a huge run along with, Seagate. We've talked about STX. This is WDC. You can just see up, I'm not going to count it out, but I'm going to say 15 out of 16 weeks or something like that. All these blue weeks. And then it actually gapped up on earnings. Do you get it's pulling back a little bit. Do you get a wobble here into the 25-day line or something? Maybe, but that looks good. We've talked about ARGX, I think, last week, gap. Holding pretty firm in here. Again, we'll see how it goes, but so far so good. ALNY, Lamb. I always have trouble pronouncing that. ALNY, but total change in character here. It's always been kind of this money-losing biotech. A gap, but then kind of crap. But had this multi-month consolidation, and then you can see, one of the clues here. Not to go on a tangent, but the video is free. When you see the stocks, you see how tight the weekly range is. I mean, it's making progress, but you see it's up 3% or it's down 1% or whatever. It's just much more under control as opposed to just flopping all over the place, news driven. That's usually a sign that there's not, the institutions aren't buying or at least in control of the stock. And obviously this thing's really changed character in the last 2 weeks after earnings. So there's a lot of those names, some of the names that had already been working. So this is like Jabil, JBL, not the most dynamic grower, but obviously riding sort of the broad infrastructure electronics wave. Big gap on earnings and just very, very tight in here, sideways as the moving averages catch up. That's interesting. Gene DX, again, I think I mentioned this last week, still got overhead. It's very crazy stock, but still has some overhead to chew through. But nice earnings reaction. They tried to sort of sell it off on earnings, but then it kind of came right back the next day. And it's just holding pretty firm in here, no matter what the market's doing, honestly, as volume tapers off. Cameco, which, I wouldn't say uranium is like a mature sector, so to speak, right? I mean, but, if nuclear becomes a thing, is Cameco kind of, the Exxon of that? I don't know. We'll see. That's sort of the bull case. But what I do know is on the chart is, you had, down, up, down, a lot of these sort of things going back a while. Again, change character in here, very persistent advance. And now you have the first test of the 10-week line last week and a bounce this week. And the volume, on the selling wasn't pleasant. You can see here. And again, that might create a little bit of overhead near term, but so far so good on that. And then even, there's been some wobbles here, but this is IBIT. It's not as dynamic as it used to be, but we'll see if it's playing possum. This is Bitcoin. You can see a nice, I mean, really, it's pretty textbook so far. I'm almost waiting for some non-textbook action, but, just very tight and controlled. Support at the 50-day line, support at the 50-day line. That's perking up. One that is a little bit more crazy is Ethereum, which is another, I'm not Mr. Crypto all of a sudden, but, they can move, and we're trying to make money here. So, it's a nice chart, but this thing was in the dumpster for a while. You can see it's really emerged here and actually hitting new recovery highs today. So there's a lot to work with there. There's some, I'll say Rocket Mortgage, RKT. There's a couple of building, the prospect of Fed rate cuts, lower treasury rates, lower mortgage rates. You can see some, big, really one of the heaviest volume weeks that it's had in many, many years after earnings and, clearing a little bit of overhead. So it's from a variety of industries. I wouldn't say they're when I look at this chart, Rocket, I'm not saying, hey, this is off to the races, but there's a lot of names that either A, may be off to the races if the market can broaden out, or kind of okay, hey, clearly there's been some buying in here, not to make too much of Rocket, but I just mean as a general example. And if the market shapes up and maybe the stock tightens up or pulls back a little bit or breaks out above some resistance, depending on the chart, you could have something to work with. For now, though, I would just say the fact that you have, there's worse environments to be in, to be clear. I'm not trying to make it bad. But the fact that you have, the NASDAQ up here and and the S&P for the most part, but just about everything else is sort of down here. I'm not saying it's a divergence to end the bull market. In fact, the NASDAQ leading is a good thing, relative strength hitting a new peak. But, the advance is a little bit elongated in the intermediate term. And the fact of the matter is, even if you just ignored all that and just said, hey, let me look at these stocks, and you looked at 25 stocks, the fact of the matter is more and more of them are basically just chopping sideways, which could be okay to hold on to, but there's not a ton drawing you in right now. So I'm pleased with the earnings gaps. I have a bigger watch list now than I've had probably in over a month. but we just want to see the market clear up a little bit and stay, like I said earlier, stay relatively close to shore until we start to see more of this, fresh leadership really declare itself and emerge on the upside. Okay, that's all the time I have for today. Thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.